Good morning, everybody, and you're very welcome to this morning's session of the InterTrade Ireland All Island Innovation Speaker Series, which is focused on the entrepreneurial ecosystem and the role of universities and intermediaries in nurturing its development. In today's session, we're delighted to be joined by Gary Stokes of InterTrade Ireland Equity Team. As part of this team, Gary delivers on key initiatives such as the Seed Corn Business Plan Competition, the All Ireland Venture Capital Conference, and the Halo Business Angel Network. Today, Gary will provide us an overview of how ITI supports entrepreneurs across the island of Ireland and contributes to the entrepreneurial ecosystem. Gary, thank you very much for joining us, and you can share your slides now and begin your talk. Thank you.
Super. Thanks very much, and thanks for the opportunity. I said Gary Stokes here, InterTrade Ireland. Delighted for the opportunity to share what we're about and what we try to do to support entrepreneurs. What I'm proposing to do is talk you through all of our supports, almost all of our supports, and some are closer there to are very much frontline supporting entrepreneurs, but all of them are to a greater or lesser degree supporting entrepreneurs. I'm going to focus in then a little bit on my area of work within InterTrade, the equity, and I'm going to double back at the end and talk about the whole venture capital piece, which really that's the bit of InterTrade Ireland that I work in, and we've been many years now trying to promote, and I do feel almost successful in promoting an equity culture across the island. Indeed, I was speaking to someone recently from the European Investment Bank and on a call, and they were saying how successful Ireland has been and that the confidence that they have in Ireland and the island of Ireland and how developed the equity culture is on the island of Ireland. So InterTrade Ireland, who are we? What do we do? InterTrade Ireland was set up way back came out of the Good Friday or Belfast Agreement back in April 1998. I'm old enough to remember that. So and it was set up as one of the 6 cross-border bodies. There was different bodies looking at European funding and food safety, but InterTrade Ireland was the body that was responsible for cross-border or all-island trade and business development. So these supports that we have with our developed out our 40 or 50 staff, as we based in Uri or based everywhere at the moment as we are re-enter the next phase of the pandemic. But InterTrade Ireland with a basic remit to support cross-border all-island business across the island of Ireland. So those supports, COVID-19, you may say to yourself, well, what's this support, this eMERGE support got to do with entrepreneurship? Well, I would argue strongly that the businesses who have managed to sustain themselves over the last 2 years as we entered the anniversary of the pandemic, and those businesses who managed to pivot are indeed very successful and very hardened, if you like, entrepreneurs. We set up this program along with a number of others, and it's still available, the eMERGE program, which has businesses pivot, if you like, in terms of looking at their online sales and marketing. Businesses maybe didn't look at those previously, but because of the pandemic, I had to look at them. So there's a small grant there available for businesses to look at things like their website, their sales promotion through social media, a range of supports there that are a range of areas of the business looking at, say, online sales and marketing. So that's the eMERGE program. It's still open, and we probably did envisage it shutting, but the way things are going, it's probably going to be open for a little bit longer. So look out for the eMERGE program. It's a small grant consultancy to look at online sales and marketing. That slide covers all of InterTrade Ireland's programs, if you like, right from our Brexit programs, which we're still running because of the ongoing issues with Brexit, to our traditional sales programs, innovation programs, raise funding that I am involved in, and our tendering programs. So that slide covers everything we do, and I'm going to deal with these in somewhat greater depth than others. Brexit, I'm not going to dwell too much on Brexit. We still have Brexit support, small grants to help businesses look at what they can do in terms of dealing with bringing in consultants to see how they can mitigate against the effects and risks of Brexit. So that program is still going very, very strong. That team are very busy at the moment. Cross-border sales, two here. You may say, what's this got to do with entrepreneurship? I suppose Well, entrepreneurs are companies that are looking to drive their businesses, not satisfying with the business as it is. I was amazed a number of years ago. We used to run a program, which an entrepreneurship masterclass program. We had the privilege of working with some of the great entrepreneurs across the island of Ireland, who would give up a day and spend a day with maybe 10 to 12 companies mentoring them. But I always remember, I was very impressed. Flahavan's Oats, and a company that a family business has been passed down for many, many years. And I thought to myself, their products would be fairly straightforward, they're doing the same thing here. Not at all. They were innovating and bringing out new products, different things, microwavable aspects, bring out new ranges all the time. Something as simple that would have started off as oats, and you think that's straightforward. No. I remember meeting John Flahavan, and I was very impressed that they were constantly innovating. So what I would say are that these businesses, that's entrepreneurship, that's businesses that are not satisfied, want to grow further and grow their sales. So we have two programs that to assist businesses grow their sell their goods to the other jurisdiction on the island. So if you're a company based in the Republic of Ireland and you're interested, and we get through the Acumen program, you can take on a salesperson, and we will part fund that salesperson to sell your goods in Northern Ireland. And it works vice versa for a company in the north that want to sell south. So that's Acumen. Now that's partly funded. Its sister program, the Elevate program, works if you want to sell your goods again, Republic to the north or north to south. That's 100% funding to build a sales plan this time. Sales plan to build a sales plan so you can sell your goods from Republic into the north. And again, that's companies, that's Elevate and Acumen supporting companies who want to sell their goods to the other jurisdiction on the island. And that's companies aren't satisfied with their current situation, always looking to grow the business, grow sales, grow the company. Innovation. We have a number of programs here, and the one I want to focus on is, and you'll excuse me as I look closer to the screen because I can't remember the Innovation Boost, and I know that program most of my time in InterTrade as Fusion. So apologies, I'm struggling to remember the new name of it. It's Innovation Boost. What is the idea? So you have a company that has an innovation project within. Now, again, what's that got to do with entrepreneurship? Again, the business isn't satisfied to stand still. They're looking to innovate. So they've got an innovation project within the business, and they want to drive that forward through Innovation Boost. InterTrade Ireland can recruit a third level graduate, that will work with a company from a period of 12 to 18 months, and on that innovation project, and InterTrade Ireland will part pay for that. That's recruited through one of the academic institutions across the island. So you may ask yourself, and not only is that innovation driving entrepreneurship within business, but by bringing in the graduate, you're recruiting a new entrepreneur. So that's Innovation Boost, and apologies for always struggling with the name of that. New funding, that's the area that I work in with InterTrade. So this was set up when we started out, when InterTrade Ireland was looking at what it should be doing, the areas it's involved in. There was a team set up, which I joined shortly after, set up to promote and create an equity culture, a venture capital culture, if you like, across the island of Ireland, where you had businesses that were aware of an ecosystem that was there for business to access growth capital through venture capital business angels. Now, we did bring in a service which I mentioned, and I'll maybe move it out of the way first. We have two which were set for established businesses. So those established businesses that are also looking to grow, they're not satisfied, but they need growth finance. So that's not relevant to venture capital. We have an advisory service there, which we have been running along with Grant Thornton for a number of years now. Our funding advisory service for established businesses. We run 12 workshops here. We had 100 people on one of our sessions last week. Very much setting out the options, the finance options for established businesses who want to drive their growth. And we also operate a one-to-one advisory service through that. So that's, in this section, that's the only bit that's relevant to established businesses. The rest is all aimed at early stage, high potential startup businesses. Those that mean 100% entrepreneurs. Those are founders. Those are people maybe have left their jobs fully or partly to go out on their own and set up new businesses. high potential startup businesses which have the potential to be world beating companies by the time the companies mature. So we have an advisory service there. We work with a former VC venture capitalist, Mr. Drew Sullivan, who's been working now for 9 years, believe it or not. And Drew meets, before the pandemic, we met companies across the island of Ireland, meets with them on a fairly on a monthly basis. He would go around, I say, or at the moment using Zoom, he would mentor those companies in terms of advising them how they go about raising venture external funding. So that's, looking at their business plan, looking at their slide deck, essentially helping them become investor ready. So that's our 2 advisory services that we run. I'm going to say a little bit about our annual seed corn competition. And by the time you view this, the seed corn winners for this year will be announced, because the overall final is on Thursday, the 25th of November. So by the time you view this, we will know our overall winners for seed corn for 2021. Now, what is the seed corn competition? It's aimed at those very companies I've been talking about, early stage startup businesses seeking to raise venture capital. These, we launch the competition every March. We invite companies in to submit an initial application. We then run business planning workshops. Business plan is core to, you must have some type of document that you can submit to investor, preferably shorter, because the investor is more likely to read it, and it's easy for you to change a short document as opposed to a longer document. So those business plan workshops take place in June, July every year. We've been running those online this last 2 years. So, and the aim is we ask for your business plan then as part of the competition by the end of August. Those are scored, and we give feedback on those, and it's important that we do that. We give feedback on each of the business plans we receive, and the top 24 across the 4 regions and the 2 categories we operate are selected at the end of September and invited to our regional finals. We run masterclasses for those 24, in which we cover marketing, presentation skills, because the investment pitch, the Dragon's Den idea, although it's a crude interpretation, but the pitch to investor is very important. Not only have you got your business plan, but you can get up and confidently, coherently present to your potential investor, and the importance of a good slide deck. And we've even been schooling people on how to do that via platforms, Zoom, etc. So, and those regional finals take place in November, and the overall final, as I say, at the end of November, and the overall prize is 100,000. And that competition has been running since 2003. The first winner, Cork-based Loxell Biosciences, went on not only to raise investment, but have a successful exit, because that is the ultimate goal of your venture capitalist, and needs to see his investment realized, and needs an exit. So we've had a number of successes through the years. So companies such as Barracuda, DataHug, and Movidius, who either won the overall competition or won a regional final, and some cases met their investor at some of the events around seed corn, secured investment, and in many, and had the ultimate goal in terms of VC and venture capital, which is the exit. So that's the seed corn competition. What else do we? Business Angel, yeah. InterTradeIreland, Best Northern Ireland, Enterprise Ireland got together a number of years ago and set up the Halo Business Angel Network, a network of business angels across the island of Ireland. What are business angels? High net worth, rich, if you like, individuals who invest not only their money, but their time in businesses. They're normally, or would traditionally be, seasoned entrepreneurs themselves. They have been through the process of startup themselves and haven't been successful. They still want to work with startups, so they invest not only their money but their time in early stage startup businesses. And that the ecosystem that's supporting entrepreneurs and angels across the island of Ireland, that has really matured in the last 15 years. The island of Ireland has gone from a very informal type ad hoc business angel approach to the island of Ireland is very much matured in terms of business angel activity across the island. And there are a number of networks, formal info, that have been established through the Halo Business Angel Network over the last number of years. So in terms of these supports as well, what else do I want to flag up as well? 2 things. Yes, if you are interested in venture capital, do look at, since way back in 2003, we have been publishing every 2 years, along with the Irish Venture Capital Association, a guide to venture capital, or a guide to equity funding, listing all the active funds and the business angel networks on the island of Ireland. So if you're, and we're about to, in fact, I have to proofread the last copy at the moment, and we're about to launch that again, an online version, very shortly next month. So look out for that, the latest edition of a guide to venture capital. The other thing I would say as well, we also run an annual All Island Venture Capital Conference, and we plan, all being well, to be in Croke Park on the 15th of March next year for the annual. So normally we would get several hundred people in a room or rooms for a day, and mostly early stage startup businesses. But 20% of the room there are investors, both business angels and active venture capitalists, who are interested in. We don't invest in companies. We don't promise you investment on the day, but it's a good opportunity to network and find out the latest what's happening in terms of venture capital, not only on the island of Ireland, but those learnings coming in from Europe and across the world generally. So we're currently preparing speakers for that at the moment. So we hope to be able to do that as a physical event. So I want to move on quickly. I want to talk about, yes, tendering. And tendering, you may say, well, these are tendering supports. And you may say, what's that got to do with entrepreneurship? Well, it tends to be that it's the smaller, earlier stage companies that stay away from tendering. The very much those entrepreneurs who have started companies are doing well. They've got good sales coming in. The business is doing well, but they tend, because they're early stage, smaller companies, they tend to stay away from government tenders because it's complex, because it's government, very legalistic, government EU law, lots of documents. I think a lot of these smaller companies have tended to stay away. And so we developed this program a number of years ago. It's basically a training course in tendering, and also a mentoring and hand-holding exercise as well. And it's been very successful. At our physical workshop, one of the last ones we held, I happened to been talking through some of these slides, and I mentioned this program, and a company came up and said, we used to win no tenders. We used to submit all these things. We give up. It went out there, and we now are winning 6 out of 10. Now, we can't promise you that sort of success rate, but certainly the feedback we've got, it's well worth a early stage or smaller company that hasn't looked at government tendering, because they are lucrative contracts. Government departments, their agencies, and are always in the market for with looking goods and services. And one thing with the government, you'll always get paid and on time. So let's say that program is well worth looking at as an entrepreneur if you are looking at support in terms of tendering. I wanted to double back a little bit, because I talked about what we do in terms of support and creating an equity culture across the island of Ireland, I suppose. And forgive me if you are fluent in everything that's venture capital, but it's one of those things that I suppose I've been around. A lot of people talk about as if they know, but maybe don't know. And sometimes it's good just to go back to basics and consider what is venture capital, what is private equity. So venture capital is exclusively aimed at early stage startup, high potential businesses. It's the early stage, the startup investment in business. The private equity end would be someone in a buyout or that sort of exercise, but in an established, well-established business. So that separates what is venture capital and what's private equity. So what is venture capital? It's equity or shares in unquoted private companies. Now, what does that mean? So that's private. So as opposed to a PLC, where you can go out and ask your stockbroker if there are such things left, or buy them online. You buy shares that are on a publicly listed company on the London or Dublin Stock Exchange. And this is not that. These are private companies. You cannot find these listed anywhere. These are private companies that, as an investor, you would be buying shares in an early stage startup, private limited company. It's not a loan. It's an investment. It's not like going to the bank. There's no security with it. So the investor essentially buys shares in your business. And it's unsecured. There's no, if the thing fails, the investment is lost. It's high risk. That's why often investors will ask, entrepreneurs will ask, why are they looking? Why is this taking so long? Why is there so much diligence being done? Because it's unsecured, it's high risk, and if the company fails, the venture capital investor or the business angel will lose all investment. So that's why the process takes so long. There's so much due diligence. So say it's unsecured. It's cash invested into the business in search of a return. So the idea is that you invest at €1 a share, and you're looking a return of €10 a share. Or when you look at that, you think, oh, that's high. Well, in some cases, you're looking 20, 30, 40, 50, maybe 100. Why VCs and angels look at high return? Remember, as I said, it's high risk, but also, if you typically a VC will invest, maybe make 10 investments, and 10 investments, they're hoping that 2 give that high return, because essentially what they will fund the 2 that fail and the 6 that sit somewhere in the middle. So that's why they're required. They'll only be interested in, naturally, so because it's high risk and because they need, for the model to work, they need a high return. They're only interested in high potential startups, businesses that have the potential to grow and reach high sales, and then get to the point where the business is able to be sold at an exit. So how well would you have to know someone before investing £1 million into the business? And again, that entrepreneurs get frustrated with the whole process of how long it's taken, how much diligence, but there is an element of building up a relationship. And again, we often advise companies, your investor wants to get to know you and know that they can work with you. You should also do some due diligence on your investor. They talk about, this almost like a courtship, the whole venture raising, that it is an element of getting to know each other. Remember, these investments once the investment comes in, it could last, the exit could take 10 years or more. So you also want to know that you can work with your investor, that maybe take a seat in your board, maybe do a little research and find what these people are like to work with if you're going to take an investor on. As I say, it's like a marriage with the planned divorce, because the divorce being the exit, it must align that you only take VC investment if at some point you're prepared down the line to sell the business. And if it's venture capital, it accelerates growth. We, along with the InterTrade, along with the Irish Venture Capital Association, have been involved in producing a booklet every so often, The Economic Benefits of Venture Capital, which clearly show on the island of Ireland, they're obviously global, and this is borne out in British, US research. Companies that receive venture investment outperform, they grow faster, they employ more people, they also do more innovation and research than companies that don't. Venture investment, it adds credibility and inspires confidence. So if you have 3 major VC investors in your company, and people on the outside world know, that shows that the outside world, shows your customers, your suppliers, that that there are institutions out there who have confidence in your business. It's unsecured finance, as I say. It means that if the business fails, it's not like going to the bank's not going to take the house away from you. You're not going to have to repay the loan. If the business fails, then you don't have to repay the venture investment. It brings cash into the business. Why do most startups fail? Run out of cash. So it brings cash into the business. It brings in a business partner and sharing the risks and the rewards. It can be a lonely business, particular startup business, entrepreneur on his or her own, doing very well. Bringing some experienced people around as a partner, not only bringing, say, particularly an angel, for example, but also a VC. They're bringing their money into the business, also bringing their expertise. They've done this before, maybe you haven't, so they're helping you as the entrepreneur to bring the business. forward, and they can hopefully point you around some of the potholes that they have previously stumbled into in the past. Higher valuation, a smaller slice, much larger cake. So the idea, okay, you may have to sell, may give up 40% of your company, maybe 40, you're losing 40, so much of the pie, fair enough, but the pie's bigger now because the investment has come in. So that's something you seriously have to weigh up if you want, if you're considering taking on venture investment. Benefits continued, brings discipline, strategic focus, having that, not operating on your own, having someone, that there are regular board meetings, someone to challenge you. Sometimes we all need someone challenge some of our more crazy ideas. Maybe they're fine, but sometimes having someone to talk to brings that focus and discipline. Sourcing board and board members and non-executive directors, VCs and angels can help source those. Again, bringing more advice for the entrepreneur. And also assistance in further equity and debt funding rounds. Most successful companies that take on VC, they'll have a seed round and they go into Series A, Series B. You will see the rounds as so maybe just one investor, maybe an angel comes in at the start, maybe one seed fund VC comes in, and then down the line you'll see three VCs coming in together. You're going to need future funding, as I say, and your initial funder may help, may be part of the future rounds, but maybe they may be joint investors in later rounds. Disadvantage of venture capital. Reduction in the entrepreneur's shareholding, as I've covered that already. Yes, you're going to lose some shares, but if you're prepared, the pie is going to grow bigger, and you're going to hopefully the company's going to grow a lot faster. VC has control over major decisions. That's right. You're going to have exclusive control of the business anymore. You have a partner in there with you now. As I said, do your due diligence and make sure that you're happy to work. Go and talk to some of the companies that this investor has invested in, so that you're happy that these guys are good to work with. Management penalised if company fails to perform. That's a rather strong one. Yeah, I mean, I suppose what it is, but again, that's, I suppose, bringing discipline that into the business. VC requirements may conflict with the entrepreneur's time horizon, and I suppose particularly in terms of that comes into an issue, particularly in terms of exit. Do you want to sell the business? I don't know. I mean, when I spoke about our seed corn competition, I can't even remember, did I talk? We have a number of, for example, Luxel Biosciences, who'd won the competition and exited, and they were bought by multinationals, and very often then the entrepreneur ends up going to work for the multinational. It is an awkward one because very often entrepreneurs have left that paid workplace to go out on their own, and it can be difficult to envisage 10 years down the line when the exit comes and the company, everybody's done well at investment, the entrepreneur and the investors have all done well at investment, but it's a decision then for whether the entrepreneur, the founder, wants to go in and work for that multinational who's bought the company, or they want, but sometimes they move on, but they don't want to go into a paid role again within a bigger company. They prefer to leave the company completely and maybe start afresh. So, but it is important to realize that the venture capitalist or the angel will be looking an exit at some point, because remember, they have to get a return for their investors as well. Yeah, I'm nearly come to conclusion. What do VCs really do? They raise money from institutional investors to pool funds for investment. So remember, when you're getting frustrated with your VC and you're thinking, remember, they have to raise funds too, and they have to get a return for their investors as well. Invest in businesses to achieve significant growth and shareholder value. They're looking to grow businesses. The support management, yes, it is a partnership between the investor and the entrepreneur, and can only work well as such. They sell the investment, hopefully at a profit. I think Listen, I hope you get something out of that. I used to work with someone who always said if you get 2 or 3 nuggets out of something, it was worth listening to. So I hope you got a nugget or two out of that. And again, thank you very much for the opportunity. Have a very good day.
Gary, thank you very much for that. It was excellent. I got at least 3 or 4 nuggets here myself, and I'm delighted. It fits excellently with how our discussions around nurturing the entrepreneurial ecosystem. As you were talking there, I'm conscious of the value of what was Fusion or now is Boost in bringing together, companies and the academic and the graduate together to work together. That's a hugely valuable initiative that allows the company get new resources, new insights, but it also nurtures collaboration from there on out between the university that the graduate has come from and that company, and helps to raise them. And that's that kind of knowledge spillover that I encourage you to continue with, and for companies to leverage that program. As well as that, to the audience there, I would encourage companies, SMEs especially, to look at their local universities in terms of the undergraduate placement programs, because there's the opportunity to get undergraduate students in for 6 months at a marginal cost, and that will bring you lifeblood and bring in a new resource and build that relationship. Obviously, the work you've been doing with the venture capitalists and the business angel network is Trojan work, and has developed the maturity of, I remember 15 years ago, business angels were not as mature or sophisticated as they are today. And I think that work that you have done in nurturing that is to be applauded, and it's driven on the ecosystem. And I encourage everybody to aim to be in Croke Park. It's, what was that date again? March
15th of March. So
15th
yes,
of March.
yes.
I can't guarantee that Gareth Brooks won't be walking around the place, but look, at least you'll enjoy the venture capitalist talks. So, Gary, listen, thank you very much for that. It's been a pleasure, and I'll just stop the recording now. And
Thank you.